principle, these core fundamentals are what will cement your knowledge for the market, are what will teach you, like when you are analyzing the chart, these are the things that will stand in your heart, that will give you better confidence about the market. Okay, so the first thing, you have to understand the kind of market that you are trading, which you already have a glimpse of how it is. So now you want to go a little deeper into the core ideas while I relate it to charts. Then by next week, there's no class tomorrow. So by next week, we will trade next week, and then we'll go deeper by explaining what the chart is and everything. But for now, let's just go a little further than we went yesterday. So please, if you can see my screen, you should be seeing the poem on my page like right now, and the infinity screen. All right, you guys can see my screen, right? All right, I can see your hand, Julius. Good. So we want to talk about the core ideas about the markets. It's a little related to the principle, but this one I just want to go deeper and cement some stuff. All right. So the core ideas. The first thing you have to know is, I already said this like a little yesterday, that you feel like if they are selling, isn't it? If the big banks are selling, don't they want are they not selling because they want price to go down? No, 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 no. The first thing you have to understand is that's not what they want. Number one, if price drops too much, they can be sanctioned by the SEC, or people will not, like, people would not want to sell, or people would like be able, it will be easy for them to track. It will be easy for us, like retail traders, to track their movement and just do exactly what they are doing. So they try as much as possible to hide their movement. But like I said yesterday, they cannot hide totally. There are some things you have to look for. So like those things are like tipping their hand that, okay, I think this is the institution doing this. But most people can't track their movement, or they are just too greedy to actually see. Do you get? So they don't want you to know what they are doing. So they want to do everything under a smoke screen. And another thing is uncontrollable moves that they cannot control because of too much money, like makes them lose and causes inefficiency in the market. When you just see price drop massively, it means there is no liquidity. Like I said yesterday, if they are trying to sell 100 million and then there is no liquidity in the market, once they put on that 100 million trade, it might just be that price at that particular price that they wanted to sell from, price will only sell only $5 million, and then the rest of the 100 million will feel at bad prices because price will be going down to look for buyers. Do you understand? So like I said, if the banks want to sell, can you guys see my screen? No. How about now? All right, cool. So let's go to the chart. Okay, is somebody saying something? All right. If banks wants to sell from this particular price, do you get? Let's say they want to. Let me put a zone because it's not. They are not talking about price now, but let me just put it at the midpoint, and then I'll mark out a zone right now. Do you get? Let's assume they want to sell, basically. So let's put this there. Okay. Now let's assume they want to sell from this particular area. If they want to, they will have to create the liquidity. Do you get? So let's assume, like I said, if they want to sell, they need buyers, right? They need opposing liquidity. That is, they need people to buy from them. So what they will do is just they will like keep price here and be selling little by little by little by little and little. Not that they will just dump all the 100 million on the market. They might just dump 5 million first. Then if they see that people are responding, then drop another 10 million. Do you get? If they see that there's a lot of liquidity, that price is pushing them, they might just drop like say 50 million. They have some, let's say 25 million left to sell. Then after price retrace into their zone a little. Do you get? Retrace into their zone a little. They just put in the last 25. It doesn't matter. They don't want price to just drop like this. Let's say they dump the whole let me say they dump the whole 100 on the market at one time. What would happen is that, let's say they are initially, people wait for time, before they can actually act. At that particular time that they dump all those things on the market, what would happen is if there are 5 million buy side liquidity in the market, only 5 million will trigger and the rest will be looking for that buy. Let's say 5 million triggers here, another 20 million might trigger here, and another, at bad buy pricing. That's what they call inefficiency. So they don't want inefficient price action at first until they fill in all their, like, majority of all their order. So they would love to fill in at least 90% of their position at this range. And that takes patience. Do you get? So they will start filling in the market. And if they are looking for bigger order, like a trillion order, what would happen is that they will create a larger range for the market, something like this, or something like this, inside consolidation. That's where they do most of their stuff. That's the reason you see that most of the time in most of the consolidation that you see, it's like the next thing that happens after a consolidation is a massive breakout. Do you get? Like this consolidation, they are just trying to, that's what they call the order appearing. They're just trying to pair their selling order with a lot of buy order that is coming in. Do you get? Based on the strategy that most retail traders use and most hedge funds use. So they are pairing their order. So once they are done pairing their order, they can just release price to go to L or whatever price wants to go. Do you guys understand? So they don't want inefficient price action and they don't want to review their intention at first. It is when it is too late that they just leave everything to go to L, like lots of stop loss liquidation and everything. But at first, trust me, if you see markets, most of the time it is consolidating because they are trying to put in their order. Do you get? Consolidating, so that they can just have that efficiency in price action. That's the reason they are trying to pair their order. Now, why sharp drops aren't ideal for them? I've already explained everything. Liquidity is key. They need liquidity to actually fill in all their order. That's the reason why they cause all this long-term consolidation, so that they can actually fill in the price. And then they need efficient execution. They don't just want to dump all the 100 million on the market. What they want to do is they want to, like, do it little by little until they get the best feel for all their price, for all their orders that they want to sell, if they are selling. And then they believe in gradual profiting versus instant move. What do I mean? They don't want price to just drop immediately like this. They don't want it. It could have happened here. Do you get? But they don't want it until they are done, they are done placing all their order, or let me just say 95% of their order. Then they can now allow price to drop. And then let's say the remaining 10%, when price retraces up, they can just use it to dump price more. But most of the time, so that they can make profits, that 90% of their position has to be filled at a very, very good price before they can allow the rest to go to shit. Do you get what I'm trying to say? Now, I know somebody would have been thinking, there is this last question that I want to answer. Do they lose? I'll answer that question when we get to. But let me first ask the question. Let me throw the question to you guys. Do you think big banks, all these people, do you think they lose money? Let me see your answers. Like, based on what you know or what you're thinking, your intuition, what do you think? Do you think they lose money? These people, like all these big banks, do you think they lose money? Anybody? John Liberty, yes. All right. That's actually the correct answer. They lose money. They lose money. But most of the time, they lose it to another big, like if you're a big bank yourself, for you to lose money, you are losing it to another big bank like me that I'm trying to fight you. It's not as if I'm trying to fight. I'll give you some example, basically. Another time they lose is when, some things just happen, like unexpected news. There was this crash that happened on Eurochef then back in, I've forgotten the year. Do you get? Lots of hedge funds, all these big funds, even brokers, they fight for liquidation that they lost a lot of money. But a lot of who won is another big bank, like another hedge fund that became rich through all those crashes that you always see in the market. It's not as if the money will just be lying around in the atmosphere or inside the internet. No, somebody already gained the money, which we would establish later. But for now, just know that your answer is very correct. The answer is yes, they lose. Yes, they lose, but not every time, because they have rules and they make informed decisions. I will explain how banks work when we get to some levels. So Why sharp drop? Adding idea for them. I want to explain each of these ideas one by one. Liquidity is key. I've already explained it yesterday. You guys should just roll with me. They need enough buyers or seller on the other side. Emphasis on the word order, on the other side of their what? Of their orders. If they are trying to buy, they need opposing liquidity. The opposing liquidity here is that they need sellers. Sellers are not, most people always think that retail trader, they are trying to target retail traders stop loss. But they are not only targeting us, they are also targeting people like them that have money. Do you get? Retail traders, personally, we have a lot of money in our numbers. But do you think all of us are taking sales? All of us are taking different kind of trades. Do you get? But there is always this imbalance between buyers and sellers. That's what determines the kind of side they want to take. Do you get? And the position where price is currently. Do you get? So basically, if they are trying to buy, they need opposing side liquidity. Trust me, if they are trying to buy, they need sellers. If they are trying to sell, what do they need? People to buy from them. It could be all these hedge funds. It could be, all these people. They need them to sell to them. That's if they are trying to sell. They need all these opposing side liquidity, which are buyers, to fill in the other side of their trade. Do you get? So if a bank is selling huge amount of assets, a sharp price drop means that there aren't enough buyers to absorb the supply. Now, let me answer this question. I know when I start, teaching some things about strategy and everything, some people will be asking some questions, but I'm never gonna really answer it again. I'm just going to explain it here. Basing fact on this liquidity, you should understand that there are sometimes in the market where there ain't enough liquidity, like Asian session. Not much liquidity are there, so not much people will be trading at that particular time. The reason why timing work in the market is because, let's say, overlap now, there is enough liquidity because a lot of people are awake, a lot of people are actively trading. So there is a lot of liquidity in the market. Then they can do their whatever they want to do. They will see liquidity for it. But imagine the time that you are sleeping. There's no liquidity in the market. Most of the world are sleeping. What do you think would happen in the market? The market will be closed. That's easy to be. You won't see much movement. The only kind of movement you see is just imbalanced movement that is just ranging choppy because there is no liquidity. So the lack of liquidity forces price down if they are selling before they can fully sell. That's the reason why they have to trade at some particular time. Let me show you something. For an example, I want to show you something, but I need to go to 15 minutes. This particular indicator that I use is not indicator per se. It's just something to tell me the timing that we have. So we have different kind of session. We have the Asian session. I don't know if you guys can see it clearly, but that's the meaning of this particular, all this box that you see. This is London session. The red part is the New York session. The other blue part is the London close, when London is closing. Now, there is something I want you to note here. Do you get? Understand first that any yellow or orange line that you see, do you get like this? Okay, the first thing I want to explain is there is always a line separating it. This red line that you see is an indicator to show me the beginning of the week, but it's not an indicator to tell me where price is going. I never use indicator as is the best indicator. It's just this indicator is to show me the what is it called? The beginning of the week. This indicator that I'm using here is to show me the day of the week that we are trading. This is Monday, as you can see. And then these boxes that you are seeing is not showing me anything other than the session that we are in. So I would know when to trade and when not to trade. You guys understand? So this orange box or yellow box is the Asian session when we are sleeping in the midnight. And then the blue box is the first blue box that you're going to see is the London session. The second blue box is the Asian session. Oh, sorry, is the New York session. Sorry, the red box is the New York session. And then the second blue box is the London close, when London is closing. You will see it every day. Asian, London, New York, London close. Then we go to Asian again, London, New York, London close. Now, I want you to see something. If big move does not happen in London, it will surely happen in New York. So this is London. Can you see the yellow box? Nothing happened during Asian. Can you see? Big movement started during London. Because a lot of people, it's 8 o'clock, for God's sake. A lot of people are awake. In London, in Nigeria, everywhere they are trading, most people are awake, trying to trade the London session. So you see they have liquidity. And by this time, I'm sure most people will be trying to buy. because of resistance or whatever they're trying to trade. Do you get, or support? Now, price sold because there's liquidity. Can you see? Price went down. Now, another thing I want to see, this is Asian section. Okay, this was after New Year. But let me show you another one. Can you see this big move that happened? Let's first talk about the big move up. Nothing happened during Asia. Big move up happened when? During London, and then another one during Asia, and then another one during London close. Those are the time I take my trades, which makes it more higher probability. Let's talk about the trades that we took, which was the sell on EU. There was this guy that said it has triggered. When he said it has triggered, the first thing I checked before I took the trade myself, before I started looking for sale, I didn't just take the trade when price got to the zone that I marked. The first thing I checked was the timing that price got there. It got there around what's it called? It got there around London, like after London open. Do you get? Then immediately during New York session, which is this way that you can see, price started going down, and then we add more during London close. Do you get? All these things are just, I'm going to start explaining one by one. When we get to strategy, I'm going to literally take my time to explain timing, why timing is very important, why overlap. Like this particular area that I mark up that I'm calling New York session is an overlap between London and New York session. But I'm just marking that particular zone that is between 2 p.m., that is 1:30 basically, and 3 o'clock. Do you get? 1:30 and 3 o'clock. Well, we are talking about GMT here, and then GMT plus one in Nigeria. Do you get? But basically, I'm going to explain the time later in the future when we are talking about strategy. But just know that there are some particular times that market is awake. Look at this big move, for an example. This move up. When did it happen? London fucking session. You can see it, all those big moves. Can you see what happened during the Asian? This was I'm coming during Asian. This was 1 p.m. to 5 a.m. in the morning. Can you see nothing really happened? It was just there was nobody in the market, not much liquidity. Do you get? But immediately during London session, price started joking and then start doing its thing. Do you get? Let's go to another D. Another D is here. Nothing happened during Asian session, but during London session, price, price, there was not enough liquidity. Then price started consolidating again. Then immediately by New York session, and that time is coupled with news. When news comes out to mask their movement, can you see what happened? Market started sitting up. Let's go to another day. This is another Thursday. Asian session, nothing much. Immediately by London session, we have this move. Then same London session, we have a drop. Then New York session continued the movement. Basically, that's the power of timing. Do you get? I don't trade in Sydney session. I don't even pay attention to it. Even Asian, I don't pay attention to Asian before. Do you get? The reason why I start paying attention to it is because most of the time, when price range during Asian session, price will take it out before going. During London session, price will just intentionally take it out before going its way. We use it as liquidity. I will explain when we get to strategy. Let me show you an example when Asian session consolidated. Well, let's not even talk about consolidation. Let's talk about Asian high and Asian low. Let me remove this red line for an example that I was talking about consolidation. This is Asian line, Asian session. Where is the eye of Asian? This is the eye. I want to show you something. This is the eye of Asian. Can you see? And then this is the low of Asian. What happened to the eye before price started moving? Price took out the eye of that Asian. A lot of people are here trading during in the midnight that they don't know what is really happening in the market. Then immediately by London, they took them out, the eye of Asian. Then they took the low out. Then they started trying to find more order in. Then immediately they got their order coupled with news. They just put in their large order. Then what happened? The large supply. But then all the orders that they traded here is already in massive profit. Now, for them to take that massive profit off of the sell, they have to look for people that will be selling right here, which means there is a low right here that was taken out. Exactly. There was a low right here that was taken out. I don't want to start explaining strategy, but I just want you guys to see that for them to even take profit, which means they are buying, they sold here, they have to buy back to actually realize that profit. They need people to sell. This is it again. Can you see what I'm saying? They liquidated people that are setting stop loss and stops below this low, and then They were able to buy because they bought enough. Price went up again into this premium area. Then they were able to put in another sell, and then they will now be looking for people again to buy their fucking orders. But then we'll talk about that later in the future. But this is just like I'm giving you the fundamentals, the understanding. Does anybody have any other question? I don't trade Sydney. That's the question. I only take trade. I don't trade Asian. I only look at Asian to give me a level of prognostication as to what to do during London and then during London and NY session and London close. Do you get all those Sydney Asian? Everything is between Asian session and everything. And then even Tokyo, everything is somewhere around this timing. But the most important timing that you have to focus on is during London open, New York, then London close. Do you get London open? Like the London and New York overlap, London itself, London close, and then the rest is New York. And then we have all those other sessions like Asian session that I don't trade. Do you get what I'm trying to say? So let's continue. The next one is efficient execution. I've already explained it. They don't want to be too visible, and then they want to fill in all their order at the best price. Do you get? Because if trader notices that all these big institutions are selling, what they will do is they will try to sell too, which will cause further price to keep looking for buyers. Do you get? So they have to do everything in a very, very subtle way. Do you get? That will not really show their real intention, but you can always track their move. Do you get? But tracking it is what I'll show you pretty much later when we are talking about strategy. Do you get? So now, number 3, gradual profit versus instant move. I've already explained the psychology behind that. If they sell all their 100 million, what would happen is that they'll be filling price at a lower price, which they don't want. Their strategy is to sell high and buy low. So if they are selling low, that's against them. Do you get? So they want to fill in all their order as high as possible when they are selling. And then they want to be buying as low as possible. Not that when they sell the first one, price just plummet and then looking for sales again and trigger another order here, trigger another order here. No. That's inefficient. Like this is pure sell. Price will always come back to it to fill it up again. When we talk about liquidity pool, liquidity void, all those kind of things, this is the psychology that explains it. But I won't lose all those big people. Trust me, I will explain in a way that you guys can really relate with and understand it. Do you get? So that's the 2 reasons why they don't want sudden drop. They will be selling at lower price, which they don't do. They sell high and then they buy low. And then the panic in the market reducing. Imagine, let me show you a market that lacks liquidity. One of the exotic pair that you can ever find. What's the name of this pair? Let's even look at our own currency, USD NGN. USD Nigerian Naira. Look at USD NGN for an example. Would you trade this kind of market? Look at this chart. Would you trade this kind of chart? Look at it very well. Or let me just go to daily so that you can get perspective. Get perspective for USD NGN. Would you trade this price, this kind of price action? Would you? Look at it very well. Price just spike up looking for sellers. There was no seller because nobody was trying to buy NGN. Everybody was buying US dollar. So everything was just going up, which means if you wake up every day and just keep buying, you will be winning. But trust me, there will be no liquidity sell for you. You get, if you press buy here, price will not buy. It will just keep going up until it gets here before buying. That's what they call slippage. You think if you just buy here, price will just trigger buy from here. No, it will not happen because there is no liquidity, there is no other side liquidity, opposing side liquidity. So price will keep going up until it sees the order that will match your order. And then immediately it finds this here, it will now trigger. That means even though you press buy at 465, price is not going to trigger, to keep going up until it triggers here at 770, 700 and something. Do you get? That's where it can find balance. And then if it keeps going up, you make profit. But good question. Can you trade this kind of price action? Let me even show you the 15 minutes chart. Is invincible. It's just disaster, basically. That's Nigerian Naira for you. Can you trade? Because there's no liquidity. Can you see how this chart is? This is not a normal chart it's supposed to be. Let me even see your comments. Can you guys trade this kind of chart? Look at it very well and just give me your comments. What can you see here? Is there any information here that you can see on this chart? You said when they sell, they have to buy back to realize their profits. What do you mean by that? Emmanuel, there is this thing that I need to explain to you. If you, like I said yesterday, I was using an example of phone. You bought a phone for 100,000 naira. Do you get? For you to actually make any profit on that phone, you have to sell the phone at higher price, which is 120,000, for you to realize the profit of what? Of 20,000. You initially bought. If they are buying, they need to sell back to make their profit. Like I said, if you took that trade, you took the sell on the group, that sell that day, you had to sell. But for you, for your trade eating TP, that is, for you to get down $57, you have to buy back. That's the meaning of closing your trade. You are buying back what you already sold. But you are not just buying at higher price, you are buying at a low for you to realize that profit. So understand this, that let me even use this for an example. Here, if you buy USD NGN and you are lucky and price goes up, for you to realize your profit, you have to change it back to Naira, because you buying USD NGN means you are buying USD at that particular time. You selling it back to realize the profit means selling means you are buying the quote currency, which means you are just, you are supporting this. So you are changing back to Naira to realize your profit. So just understand this, that when you buy a currency pair, do you get? You buy a currency pair, let's say your buy triggers at 1,500. And then when price gets to 640, you take profit. The act of taking profit means you are selling back this currency pair to realize your profit. That's what you are doing. Just like you are buying, let's assume you buy a phone at 1,000, you buy the phone first as 1,541. That's the price you bought it. Then you wait for the price to get to 1,641. Then you sell it to somebody. That it's a market. That's what I'm trying to tell you. You sell it back to somebody to realize the profit. But now the currency pair would not be USD NGN. Do you get? It will be phone. Let's say Samsung phone is what you bought for 1,500, but it's highly impossible. Let's talk about Nokia 3310. Nokia 3310 NGN. So the first thing you did was buy Nokia 3310 NGN. That's the currency pair. So by buying that particular pair, Nokia 3310 is not the base currency. By buying that particular pair, it means you are buying the base currency. At what price? 1,541. Then the price started going up and then started going bullish. And then once it gets to 1,641, you sold that phone back. If you sold that phone back, what would they pay you? They'll pay you NGN. Somebody in the market already bought that phone from you, hoping that it will still go higher. So by you selling that phone back, that is Nokia 3310 back, you are getting what? NGN. Even though you are selling that phone back, that's, the reason I'm talking about selling here is because you have to talk about everything in relation to the base currency. But the act of selling a currency pair means you are automatically buying NGN, that is, you are buying the quote currency. If that is very complicated, that means you didn't attend the beginner's class. Who understands everything I just said? If you understand, drop 777. Everybody, Emmanuel, especially Emmanuel. Okay, Emmanuel said he understands now. Anybody else? Do you guys understand? 777. Good. Julius, I can see you, and Timilade, I can see you. Now, you guys understand that the first thing you would be thinking, let me go to a normal pair. A normal pair should not look like this. This is an exotic pair. Do you get? It shouldn't look like this. So let's go back to GBP/USD, or let me use EUR/USD in this case. All right, this is GBP/USD. There's EUR/USD. All right, let me use EUR/USD in this case. You guys understand that before they can sell, right now, you should understand that before they can sell, they need liquidity. You don't just want price to drop like this. If price drops like this, it means there's no liquidity. So most of the time, they want to bring price up and then start filling up again. Then after they fill in their good order, then they can allow price to drop and fucking drop. Do you get what I'm trying to say? So fast move is not what they want at first. What they want at first is to consolidate and then let people just, imagine this is a whole week of consolidation. A lot of people would have taken a lot of trade. Some people are hoping price will go up. Some people are hoping price will go down. Do you get? But for people that are hoping that price would go up, yes, they took price up at first. So a lot of people are buying more. Now the market has broken structure. I don't want to explain break of structure, but now they believe this is a break of structure. Do you get? So they are buying more, and some people will set buy stops here. Do you get? So their buy stop order has already fulfilled. All those things are buying order. That's what they are looking for so that they can sell. So after price got above this high, what did they do? They placed all their sell, but there was not enough liquidity. That was the reason for this huge drop. But they've not filled in all their order yet. So they brought price up. Do you get? But another thing you have to understand is this: there are people here too. There are people here. There are people here that are set like sell stop and everything. I don't want to explain that now, but just try to understand that they are selling orders here, they are buying orders here. So right here, they have to close most of their position again. For them to close this sell position, they need what? They need people to, sorry, for them to close this sell position, they need to buy back, which means they need people to sell. Yes, they are sellers right here. They are sell stop here. So they bought back, they were able to buy. Then they started again accumulating price. Then after accumulating price again, to fuck people up again. Do you get? They allow price to fall. And everything I'm going to explain all the psychology behind that, always get strategy. But also understand is that they don't want instant move. They don't want moves like this. They want instant move. Let me show you something on the daily time frame. I'll explain all this time frame shift later. You see, one thing I want you to realize is this: price might be going, if price is going here, it will not just fall. You know, they might be targeting, this might be their final area that they are going. They are going, let's assume they are going to parity. Parity means US dollar is equals to euro dollar. So it will be somewhere at 1.00000. That's $1. 1 euro is equals to $1. That's what they call parity. Let's assume they are going to parity. Do you get? Even though they started the move last year, September, that is this move down, price will not just drop like this. One big ass candle like this and drop to parity. Never. do you get? A lot of like SEC and a lot of regulatory body will sanction them. It's not like crypto. Crypto, like I showed you Luna yesterday, FTX. Something might just happen and price will drop to zero, fucking zero. Do you get? So basically, they will have to build their liquidity up every single minute of the day on the daily time frame before they can get to where they are going. That's the reason why trend tend to last. Do you get? If market is going bearish, it might be going bearish for the rest of the year. And if it is going bullish, it can go bullish for a lot of months. Do you get? It's not easy for trend to change like that. That's what I'm trying to establish here. But for when we get to trend, you understand. When we start explaining strategy, you understand what trend really means. So now, why sharp drop don't work for them? I've already answered that question. Actually, there's a point where sharp drop are beneficial. When is sharp drop beneficial? When the sharp drop works for them, after institutions are completely bidding and closing all their positions, do you get? Then they may trigger sharp move to manipulate markets in their favor. For instance, they may engineer a drop to flush out retail traders and stop loss to create liquidity pool to buy back. I've already explained all those things, the strategy behind all those things. That once they have filled their order, they can put on the last trade. The last trade that they are going to put is going to create massive liquidity in the market. Do you get? So that they can enter their order. So now, let us continue. Trading as a transfer of money. I've already explained this small yesterday, like in a very, very, but then you guys should understand that every trade has two sides, a buyer and a seller. Do you get? What you are doing is, if you are selling, you are competing against the buyer. Do you get? For you to profit from a buy position, someone else must be losing on their selling position. Do you get? For you to make that $50 on the sell that we took, someone else must have lost on the buy position. Think about it like this. Let me put the price here. Let's say price is at 1.2482, and then you sold. Do you get? It means somebody else bought here, hoping that price would go up and then clear all this high. But we don't know who will win yet until price sells. That means you won, or price goes up. But if price goes up, you're already transferring your money to that particular guy that bought. If price sells, that guy is transferring his money to you. That's basically it. There's no money in the market, only money from somebody to somebody. But when we talk about the total daily liquidity, that is the daily turnover, it means the amount that is put into the market every day that a lot of people want to trade with. If you add everything together, we are reaching something like $7 trillion. There are a lot of people trying to make money from their money. You need money to make money. So a lot of people are ready to make money. So they put money into the market. So let me just say it like this. There are lots of money to be made from some people, from all those rich people and stuff. Do you get what I'm trying to say? There are lots of money to be made, but there is no new money, even in Bitcoin. Do you get? Even in BTC, everything I've been telling you, there is no new money that is being created. No new money. All these bullish run, bull run that you see, is somebody putting their money on the line. And then once all those big people are ready to take profit, it is those people that are buying at the top. They would have to come. You see, if they want to take profits, let me show you what I'm trying to say. But it will be a little, explanatory. It will make sense a little on what's it called on the daily time frame, because it will show you the real issue of charts. But then let's go to what's it called. Now, I want you to see something actually very, 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 very cool and interesting. Do you get? Back in what's it called? Back in February 2023 or March 2023, market took out this low because a lot of people believe bull run has started. Sorry, a lot of people believe bull run has started as far back as then. Do you get? Because markets broke the structure. So a lot of people that are trading futures or Bitcoin would never believe Bitcoin was going to drop below this low and below this low. But what happened? Price dropped below it and went to what? 1951. So a lot of people are scared and selling. For future trader, they've already been liquidated. But a lot of people on sports now, we are talking about spot trader, they've already been liquidated. They were thinking market is going down again, bearish movement, all this bear market has started. So they started selling. Panic selling is what they call it. Believing the market is going to go to wherever it is going. But what happened? All those selling, they bought it back. But because there was no demand, was too much, there was not much liquidity. The rest of the liquidity that they are looking for pushed the price upward. So the demand was very, very high. There was no liquidity. That's what this particular move means. So price is going up to look for sellers. Do you get? But they've already been able to fill their order here because a lot of people have already been liquidated and a lot of people have panic sold. So they bought from them at lower price. And then now that price is up, they want people to buy from them again so that they can sell at lower price. So what happened? You miss this bull run because you panic sold. You are buying again at these high prices because you believe Bitcoin is going to go to 50K. Do you get? So you started buying. Do you know? You started buying. Now you said, I'm going to hold price. Now I'm not going to panic sell. But then price started creating this, all this downward trend. For weeks, do you get? From April to June. If you are strong around June, you might be weak around April or just need money urgent money for anything and sell. Anything can happen. You need urgent money, you just convert your coin that will buy later because it's still consolidating anyways. So when you sold, they bought from you. They are constantly accumulating from here. So price went up, you missed it again. You'll be like, the bull run has started to 50K. You bought again from here, you bought more from here. Then price started consolidating and then dipped again. You see this, you wouldn't know that price was going to go up until you saw this dip. You think it is going down again. Then you see all this manipulating your emotion and greed and everything, greed and fear. When we get there, the very interesting topic, you will see that most people don't make trade. They don't take trade. The reason why most people lose is because there's no common sense in trading. They don't have common sense. They are only trading. Even if Baba testing trade is going to lose, because there's this human element, psychological thing that happens with trading, that the people that are making it out there in the world, if you want to become a lawyer, you can read a book and become so good at it. But even this one, if you read a lot of books, you can still become bad at it if you can't control your emotion. That was the reason. The first thing I taught you was risk management. That when you are gaining, you should not be too happy that you're making bad decisions. Like, you cannot lose. Do you get? Anytime I want to trade, the first thing is, how much am I losing? Just in case I lose. Do you get? And if I lose, it's not painful. I don't fucking care. It's only $10 out of $1,000. And if I already made $5, which is $50, if I lose $10, it does not pay me. Now imagine you are risking all those $50 again. You'll be scared. You see, all this manipulating of emotion is what, when we get there, I'm going to explain it to you. All these things, common sense should tell you that you should hold. Do you get? That you should buy at the low. But when price was here, you'll be scared that price will still go down more. So you won't buy until price gets here again. You feel like you've missed out. So let me buy more. Do you get what I'm trying to say? So all this manipulating emotion is what happens. But banks don't work on emotion. They work based on logic. They are trained like that. So they know exactly what you are doing here. So a lot of people sold to them right here. You see, based on this huge move, and then price started going up. Now, price has gone up heavily. Price has gone up heavily. So they need to take a little profit so they can buy more. You know, this Michael Saylor BlackRock kind of buying. Then they have to consolidate again for like months to just convince people to just sell their coin to them. So as you are selling, they are buying it up. As you are selling, they are buying it up. As a lot of people are convinced that BTC is going to go down, especially this particular move that happened. And you see this black swan event, like this one, price just dumped from 69K to what? To 50K. You would think their price is going to 26K, but a lot of people have already sold to them, like here. So they bought it back, and then you just hear that Mike Saylor has already, you know, all these kind of things. I'm just trying to explain the psychology behind all the market movement that you're seeing. So markets will not just dump up like it was the demand after, what's it called? After Donald Trump won the election, the demand happened. There was a lot of people trying to buy crypto. But trust me, when I'm saying price will still consolidate so that a lot of people can sell their coin. And then these people will still accumulate more and buy it more. Do you get? It will surely happen. Do you get what I'm trying to say? So most of the time, the best time to buy, this is the first strategy I'm going to teach you when it comes to investing. The best time to buy, everybody knows it. The best time to buy is when the market is, you know, when everybody has already lost hope. That is when the market is down, during those deep times. You know, buying the dip. I'm talking about when most people are extremely pessimistic. How was I able to predict XRP? The reason I was able to predict XRP is not because I was like, it's not because I knew something that was different. All that happened was that there was this fire that was just happening with their case, the hard case. So it was like they wanted you to be scared so that you'll be selling all your coin. If you have it, you sell all your that this thing is going to shit. So when price got here, I felt like, okay, I didn't buy it here, though. It was not here. It was after this move and price dumped again that I felt like buying, because a lot of people will be saying, they'll be like, because of the case. You know, they have this case with the SEC that XRP is not a security and whatever that they are trying to prove. So they gave them fine. So immediately they won the, what's it called? Immediately they won the case. The first case that they won, not that they won the case totally, they won the final judgment of Torres was that XRP is not a security, that they should pay fine. The XRP started going up. And then again, XRP, perfect timing, timed it that they are, you know, they are sanctioning, or I've forgotten the name. They are trying to, there's this thing that XRP did to question the judgment of Fernandez Torres. That's the judge. So that was what led to all these things that were happening. They were just trying to store time. So a lot of people will be confused and just sell their coin. Then immediately, can you see what happened? Immediately after, a lot of people have already panic sold. Can you see what happened? Price exploded to the moon. Do you get what I'm trying to say? So it's the psychology. It's just transfer of wealth from somebody. You have to sell to some people. So, but big banks knows how to convince people. Do you get to always sell to them? Do you guys understand? So now let's talk about buyer versus sellers. Every trader has two sides. You already know it's a buyer and a seller. For you to profit from a buy position, somebody else must be losing on a sell position. Then liquidity pool. I've already explained much of that. Do you understand? So why must someone else lose? You already know the answer to that. Trading does not create new wealth. It redistributes existing wealth. That is the money that another person puts into the market. I've already explained that. And then why do most traders lose? When I was explaining all this chart and everything, I've already answered everything. Number one, bad psychology. Emotions like fear, because they are scared, their price is going to dip. I think my battery is almost getting low. Okay. Psychology, and then lack of strategy. Most retail traders don't have strategy, they just trade. They just trade anyhow. Do you get? And then the cost of trading, like spread and commission and feed, everything adds up. Do you get? Everything, all these things, I'm going to explain later when we get to psychology. Okay. Now, why not everyone can win in the market? Those with better understanding and strategy and discipline are most likely. You see the word most likely. I'm not saying you see, I've never ever said to anyone that you can, like, if I do signal services, do you get? I have high winning rates, but I will never at the beginning, I'm not trying to scam anyone. I will never at the beginning tell you that I will guarantee what's it called, 100% winning rates. There's nothing like that. But if you have all these things like discipline, risk management, if you have discipline, risk management, close the door, please. It's not a great question. So, like, if you have everything like risk management, do you get everything that I said? You surely make profits, because a lot of people, when things happen, like when all these things happen in the markets, they lose it. So that's the reason why you need discipline. You need discipline to make profits. You need risk management. You need understanding, like the one I'm explaining to you, and then you need a strategy. Do you get? Which I'm going to give you. Then discipline is not something that I'm going to teach you. You are gonna have to learn that yourself. Now, trading is very competitive. Those with better understanding and more informed information, they win consistently because they outsmart those who lose. This does not make trading unfair. It is just, trading will reward people that are better, people that are more patient, but it will never reward people that are, that are too emotional, and it will never reward people that are just looking for quick profits. Let me just enter the market and look for money. That's the reason why this psychology of let me just make 1 million right now, because it does not work. You have to be patient and wait for the right opportunity. But if you cannot wait, if you are impatient, extremely greedy, it's good to be greedy, but not too much. You need greed to make money. Do you get? Like I said, when I ask you to risk $10, because of fear, you could have risked $1 because you are scared of losing $10. So you need fear also. You just need to balance both of them. You need to balance greed and fear, basically. That's what I'm trying to say. If you have too much greed, you would have risked like $500, and I asked you to only risk $10 because you want to make a lot of money. Risk $500. So you need what? You need greed and fear. You need to balance both of them. All right. Now, like I asked you when I was talking about the food chain of the forex markets, the best people to align yourself with are the banks and large institutions, because they dominate the market, they move price, they control liquidity. Do you get? Those are the best people to actually align your trade with. If you want to trade, you have to follow the smart money. The smart money are those big banks connected together. You have to learn how to track their movement. Will you get their moves every time? No, because is one bank institution, is one big bank against another big bank. Is Michael Saylor against, I'm not so, like when I say Michael Saylor, I'm talking about all these, I'm talking big, whatever, but I'm not trying to, I'm just using it as a metaphor. Like Michael Saylor against BlackRock. Do you get? So although retail traders suffer, but they are not really targeting you, they are targeting themselves, but you can always track their movements. Do you get? Do banks, this is the penultimate slide. Do banks and institutions lose? Yes, they lose, but it is very, very rare. Why? Because for you to trade with the banks, let's say tomorrow you become good and then you want to trade with the banks, there are some things that you are going to sign that if you make any mistake, let's say you make a mistake. Now, let's say you were not supposed to you were not supposed to buy XRP, and because of your own judgment and analysis, you feel like you should buy XRP, and they were not even planning to invest in XRP, and you bought XRP, and let's say you made them $100 million, you are going to jail, because you've already signed that there are some things you should never do. You must not make decisions from your common sense or based on your emotion. There are books that they follow. There are rules that they follow. Do you understand? And then they are even trying to remove this human element away from, trading nowadays. That's the reason why they are investing heavily into algorithm, quant trading, AI, all these things. They're investing into it. They don't want humans to trade for them because humans make mistakes a lot. So they have, like, everybody trading for those big banks, they are under strict rules and strict management and fucking, how do I say, supervision. So they can't just make any decision like you. When you are trading, you don't have boss. You don't have self-discipline self. You just, what you are doing when you are on chat. But these people, they are so disciplined that they cannot just lose. But when they lose is when macro events happens or market shock or interbank competition. I said one big bank against another big bank. Do you get? So they trade against each other. So some will inevitably lose in the battle. Do you get what I'm trying to say? So then the final thought. It's not about there being enough money in the market for everyone. Like I said in the beginning, when I asked you the question yesterday, do you get? It's not about, is there enough money for everyone or there's not enough money. That's not what we are trying to talk about. The market does not create new wealth. What it does is that it redistributes it. You collect money from somebody that is not smart, that is just gambling, and you that you know better, you know how to trade against that. Do you get? Like I said, most people always think trading is gambling. It is not gambling. It's like saying investing is gambling. It's not gambling. Some people win consistently because they understand all these basic tenets that I've explained to you. Do you get? By understanding them, having discipline. If you understand them, trust me, you can stop fighting against all these big players and start trying to track their moves. The first thing you have to accept is that retail trader, with all their strategy that they have, they cannot move the market. Never will they be able to move the market. So all you have to do is find a way to track the big players and then you trade alongside them. Do you get? And instead of placing liquidity or your stop loss in obvious places, what do I mean by obvious places? Like in the middle of the chart, you can just be anticipating liquidity grab before you actually place your stop loss. A lot of strategies I'm going to teach you in the future. Okay. So this is the end of the slide. If you have any question, now is the best time to ask the question. I'm going to be unmuting everybody right now. So you guys can turn on your microphone right now and then ask any question. But you know how we do it. If you have any question, you have to raise up your hand, then I'm going to call you. And then if your background is kind of noisy, you can just drop it on the chat. You can drop the question on the chat. Do you guys have any question? If you guys understand everything I've been explaining this morning, drop 777 on the chat. And then I'm going to be ending this meeting. And then another thing, did you do the assignment that I asked you to do? Did you do the research yesterday? If you searched about buy stop, sell stop, drop 666. If you searched about all these buy stop, sell stop, everything. The reason why I actually search about it is because when I'm explaining strategy, sell stop, I wouldn't want to go back there. Yes, thank you, Timlane. I see you. All right, Temi has a question. Timilade, you can unmute yourself.
All right, Gabriel, thank you for the class. I so much appreciate. Sorry, can you hear me?
I can hear you perfectly.
All right, so my question is this. You mentioned that most of the time we have to pay attention to the big guys in the market, like
Yeah,
the big movers. So,
yeah.
and like you also mentioned that there is no way. So I'm kind of like looking like, is there anything that can serve as an indicator for us to know that, okay, this move is actually the big guys, or is just something that we can just
Yeah,
come
yeah,
across
yeah.
randomly on the news?
No, like I'm saying, what I'm saying is that I'm not saying you cannot predict the big guys. I'm saying you are not going to be right all the time because they are also trying to hide their move. And then another thing is whenever they are trying to, map in all their orders, market will be consolidating. And then they are seeing the market, but market will be consolidating too. You'll be expecting the move to happen, but it will not happen at that time. So you might just be so frustrated and just exit the market, and later you see the market has already fallen, that you were right all along. What I'm trying to say is that you can actually predict them, their movements. They are the one that do, like I said, the only people that can take this kind of move, you see, market is here. There is this previous day high. The only people that can move price above an high that can make price break structure, they are the one that can move the market. You know, the trader cannot do something like that. So they are the one that move price impulsively to a place. And then they are also the one after they move price and taking out people's stop loss. Although this particular buy that they did is in loss, do you get? But it's only a small money. It's only small money. Do you get? They are just trying to take out stop loss. Then they are going to pull in a large selling orders. You can always predict it. When we get to strategy, I will explain more how to track all of them. But just to know for now, on this beginners, not beginners level, on this entry level kind of place that you have, just know that they are the only people that can do all these big movements because they are the one with the money. Do you get? They are the one, and whenever market is consolidating, they are just the one trying to input whatever order they're trying to input. But you can always track their moves. Do you get? They are the one
So,
that lead
so,
imbalances.
so the key takeaway is that the moment there is an impulsive move, like heavy impulsive move, the big
Yes.
guys are in the play.
Yes, yes, yes. And
All
another
right,
thing
thank
to
you so
note,
much.
to know when they are going to enter, there is this thing called forest factory. When we go to fundamental analysis, you will understand it. The
Okay.
when you see a lot of news, let me go to forest factory. Okay, I cannot open. Okay, you know what? Let me go to forest factory. Let me show you something. Whenever you see red impacting, that is high impacting, all this, I will explain it. You guys might not
Okay.
understand what this is right now, but for most people that they have the idea, these are just economic calendar. Do you get?
Okay.
Whenever you see a lot of red, they always use
Mm.
news to mark what's it called, whatever they want to do. Do you get? So
Decision.
whenever there
Yeah.
is news, there is interest rate reduction and everything, they can use it to move the market because they know a lot of people will be in the market at a particular time trying to trade the news. Do you get?
Mm.
So they
Yeah.
can use it to manipulate the market to wherever they want it to go. Trust me,
Wow.
most people always think whenever we have green, market should go
Yeah.
up. And then
Yeah.
whenever we have red, market should go down. That's a
That's
very,
the
very
common
false
opinion.
idea. So they already
Mm.
know that this is what retail traders are more they are predisposed to do. So whenever they see
Mm.
green, they might first, whenever it is green,
You can
even
change
though the
their mood.
market will eventually go up, the first thing
Mm-hmm.
they will do is that immediately there is green, a lot of literature already bought, right?
Yeah.
They'll first push price down. You just see price spike down before going up.
Mm.
It will
Wow.
eventually go up, but they will take your liquidity for they will eat your stop loss first before they can start going. So they use all this news to mark
Mm.
their movement, but you can always predict it. Do you get?
Okay.
Like
Yeah.
when we get there, I don't want to start explaining sorry now, but when we get there, I will explain everything.
Okay. All right.
But
Thank you very
trust
much.
me, it was news that caused this thing. So it's going to go
Mm.
down. But a lot of people who have sold there already, that they believe that price will go down. Do you get it?
Yeah.
Especially after the
Yeah.
intervention, they've already hit their stop loss right here. That was the reason why I marked it out as liquidity grab.
Mm.
But I don't just jump into the market immediately. I have to look for more confirmation that okay, they are trying to put in sell order now. Do you
Mm.
get? Which I'm going to teach you
Yeah.
later in the future. All right.
Okay.
So
All right.
can you see what follows after? This was what followed. This big,
The big move. Mm.
yeah. And don't mind my voice. I'm not really feeling well. I'm just trying to stay consistent with the classes.
Wow. Sorry. Sorry. Sorry.
All right.
Thank
Let
you
us
very
continue.
much.
Olajumeji in line. You can mute yourself now. Olajumeji in line. You can unmute yourself.
Right. Thank you very much for today's class. I
You're
just
welcome.
want to ask regarding the crypto market.
Hello. I can't hear you. Similar, I can't hear you at all. Similar, if you can hear me, I can't hear you. Can somebody hear Similar? Or am I the only one? Can somebody hear Similar?
Smart money.
We
You are
couldn't
not
hear
the
you
only
at
one.
all. Okay, okay. Similar, we can't hear you. I think your network is kind of, you know.
Hello?
Yeah, we can hear you now. All right. Fire. Shoot.
Should I come again?
Yes, come again. We can't hear you at all.
Okay. Okay. I said you explained that the forex market, the big banks, the institutions are the ones who control the price.
Yeah, yeah.
Then I was asking that of the crypto market. Are they the one who also control that of the crypto markets too, or who are those who control the price
They are
of
also
cryptocurrency?
there are also all these big institutions, all those like Bitcoin right now. I can literally tell you three people, but let me just mention two is popular. We have Mike Saylor, MicroStrategy. If you've heard about that, they are the one that are buying Bitcoin like excessively. We have BlackRock, we have Donald Trump himself, and even we have like when Bitcoin is going to go up the most is when all these people, all central banks are trying to compete that they want to make crypto their foreign reserve. So a lot of people want to buy Bitcoin. So there will be a large demand for Bitcoin, and then Bitcoin is going to that's when it can actually reach 1 million in price. Do you get? When most big banks are competing that they want a lot of Bitcoin in their foreign reserve. Do you get? So we have a lot of people that are buying Bitcoin. Like I'm talking about rich ass people. But you probably have heard about MicroStrategy, Mike Saylor. You've heard about BlackRock, how they are buying a lot of crypto. They are always this entity. Do you get? They are extremely rich and always investing into this thing. That's the reason why you see when a crypto just starts, they want to make it popular. So most of the time, the dev, that is the people behind that crypto, will send it to one popular, probably they send some coin to Donald Trump, his wallet, just to make it popular. Do you get? So a lot of people can put money there and start buying it. The reason why Bitcoin will go up is because a lot of people are putting money into it. The reason why XRP went up is because of people, a lot of people are buying it. So when big institutions step in, you will see a lot of demand for that particular coin, and then you just see skyrocket. That's what is happening. All these big, we don't really have money. Do you get? But when all these big institutions start taking interest inside the particular coin, there's no way you are going to see all these things skyrocket. Do you understand what I'm trying to say? Do I answer your question? We might not have big banks, but they are also big. We can also call them big institutions too in crypto, like BlackRock, because they are extremely rich. Trust me, they are not only controlling like a portfolio of 1 million, 2 million. No, they are controlling portfolio of up to like 1 trillion. Go search about BlackRock. Do you get? Search about BlackRock. Search about Donald Trump's crypto account, crypto wallet. Search about Michael Saylor, MicroStrategy. Do you get? Search about all of them. You will see that they are these people that actually push the market. And another thing I want you to know: if anything should happen today, and BlackRock sells all their coin, Bitcoin might go back to $9,000. Do you get what I'm trying to say? If BlackRock, I'm talking about these big people that own Bitcoin, if they send all their, you see, when they call they don't call them institution in crypto markets. Do you get? They call them whales, WHALE. Whenever you are talking about whale, you are talking about mad rich people that have a lot of that currency. Which means if I thought they are not interested in that coin anymore and they liquidate it, they will make the money and then they will dump it on all of us. That is just normal people like us that are looking for bull run. They will dump it on all of us and then we'll be eating dust. Who do you think dumped Luna? Who do you think dumped FTX? So it's because all those big institutions were not interested in it anymore, and then all of them dumped it at the time, and then price was. Let me go to Luna again. You know, I showed you Luna. I think I showed you Luna yesterday. Luna. So it was when all those whales were not interested in it again. That was what made the price drop. Let me go to weekly time frame. You will see what I'm saying now. Can you see this particular move on this day? When Luna released that stupid letter, they liquidated everything. Can you see? That's exactly what I'm saying. They call them whales, not banking. They don't call them big banks. In Forex, we call them big banks. In crypto, we call them whales. They are whales. They are called whales. But it's the same thing. They are fucking rich and they can manipulate the market at will. Do I answer your question? Who has another question? Okay, in the absence of no question, I'll be bringing this meeting to an ultimate end. Thank you for attending this meeting.